Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard tab, you can set up your core drivers or core inputs for the model, see the core financials and see the core charts related to the model. So let's begin from the launch date of your business, for example, April 20, and additionally you can see the note window for each assumption or each yellow cell. This is across the whole model. It will just help you to understand what you're supposed to input in this cell. The next step is to input your marketing budget and visitors assumptions. You have the options here, which is offline and online marketing. So if you don't need offline, for example, you can just clean this section and keep only online marketing. If you need both, you can adjust these numbers and have the needed calculation. So let's start from the online marketing. Let's pretend you have $15,000 in average per month in the year 2020, and each next year you will have additional $2,000 per month for your online marketing budget, up to $23,000 in the year 2024. The next step is to set up the cost per visit. For example, $1, 1.2, 1.4, 1.6 and $1.8 in year 24. As a resulting line, you have total visitors by years, which you should convert using the conversion rates within your sales funnel to new paying customers. So first of all, you need to convert your visitors to sales opportunities. Let's pretend this is 10% across all the years. So for the year 2020, you will convert 139,000 of visitors to 13.9 thousand of sales opportunities. The next step is to convert these sales opportunities to freemium or directly to paying customers. Let's pretend 40% will be converted to freemium customers, and the last 60%, which is 100% minus 40%, will be converted to paying customers directly, without freemium stage. Additionally, you need to input on the customers movement tab your conversion rates from freemium to paying customers across the months, which I will explain a bit later. And as a result, you will have the new paying customers by years. The next step is to allocate your new paying customers across 3 offerings. You have up to 3 offerings here, which is base, medium and enterprise by default, which you can adjust. For example, pro here, you can adjust this name and this name as well. And you have allocation by years, which is 25%. We can change it to 20, for example. Medium can be 40, 45, 55, 50 and 60%. And the last part, which is pro, will be 100% minus 20 and minus 40. Which is 40%, and this is changes across the years as well. If you don't need base, for example, you can just clean this base and you will have 100% minus medium calculation. If you will input something wrong, for example 90% here and in medium 40, in total this is already 130%, the pro calculation will show you the minus 30% which is wrong, and you will see the red color here. If you will input everything correctly, you will have only gray color in calculated cells. The next step is to allocate the new paying customers within the offerings by monthly and payment cycle, which is monthly, annual, can be allocated like 40%, 45, 50%, 55 and 60%. And the rest, which is 100% minus this percentage, will be allocated to annual payment cycle. If you don't need to use monthly payment cycle, you can clean this and you will have only annual payment cycle. And vice versa, you can input only monthly payment cycle and have no annual payment cycle at all for this offering. The same idea for second offering, which is medium, and the third offering. Once you input all the revenue assumptions, variable expenses, fixed expenses and wages, you can review your core financials on the dashboard and see the active customers chart, profitability chart, cash flow chart, and the cumulative cash flow chart. The seasonality tab, you can input your marketing expenses seasonality assumptions, allocation by months across the year. If you don't need any allocation of marketing expenses, you can just put equals 1 divided by 12 and copy this across all the months, and you will not have any seasonality across the year. Means that across all the months your marketing expenses will be equal by year. But if you need them, you can input some assumptions or allocate 100% of your marketing expenses across the year. For example, 10%, 15, 5, 7, 8, 3, 2, 5, 10, 8, 7, and 12. As you may see, I just set up the seasonality across the months and I see the red check. That's because the total across the year is not 100%. It should be always 100%, so let's adjust. So I need to add 8% somewhere. For example, here is 6, here is 7. So now everything is 100% across the year and the check is green. That's good. So below you may see the actual absolute values of marketing expenses across the months and across the years as the totals. And at the bottom you may see the chart of breakdown of your marketing expenses by months. On the SaaS charts tab, you may see the main SaaS KPIs and metrics broken down by two sets of charts. On the left side you can see the monthly amounts for the 2 years, and on the right side the monthly amount for 5 years. So on the top set of charts you may see the MRR breakdown by 3 offerings. In this case this is Enterprise, Medium and Base. The next couple of charts will show you the MRR movement, which is new MRR, churn MRR by months, and as a result on the yellow line you may see the active MRR. On the next couple of charts you will see the lifetime in months of the Base, Medium and Enterprise customers. The next couple of charts will show you the lifetime value broken down by offerings. The next chart will show you the customer acquisition cost by months for the 2 years and for the 5 years. The magic number broken down by Base, Medium and Enterprise and for the total customers. The magic number shows you the efficiency of using marketing expenses in terms of the acquisition of new booking. Average recurring revenue per customer is total and broken down by offerings. New visitors and new customers, which shows you the efficiency of your SaaS funnel conversion rates. The MRR growth, which show you the new MRR in dollars and month-over-month growth of MRR. The SaaS quick ratio, which shows you the ratio between new MRR divided by churned MRR. And one of the important SaaS KPIs, LTV to CAC ratio, it should be also always more than 1. In this case it is minimum, I would say this is 20 in this case, so business works very good in this case. Yeah, that's it for this tab. The customer charts tab, you may see the main charts related to the customer metrics. You may see the two sets of charts. From the left side you may see 2 years broken down by months, and from the right side you can see 5 years broken down by months. In the first set of charts you may see the freemium users, which is active freemium users by months. The next couple of charts will show you the customers breakdown by Base, Medium and Enterprise, which are default offering names in this model. The next set of charts will show you the customer breakdown by monthly and annual payment cycle. And the final set of charts show you the active customers, which is shown as a yellow line here, and the new customers and churn customers by months as blue and orange color. On the financial charts tab, you may see two sets of charts with main financial KPIs. On the left side you may see 2 years broken down by months, and on the right side you may see the 5 years broken down by months as well. So on the top pair of chart you may see the EBIT by months. The next couple of charts will show you the EBITDA with comparison to revenue and cost of services sold by months. The next chart will show you the operating cash flow broken down by cash inflow and cash outflow. Then cumulative cash balance. On the next chart you can see the productivity KPIs, which is average revenue per FTE and average OPEX per FTE by months. The next chart will show you the revenue breakdown, which is breakdown of the revenue by 3 offerings and main payment cycles, which is annual and monthly, and additionally advertisement revenue. On the next set of charts you may see the revenue breakdown by recurring revenue and one-time revenue, which is setup revenue. And on the final set of charts on this tab you may see the monthly costs by P&L categories, which includes cost of services sold, salaries and wages, variable expenses and fixed expenses. On the income statement tab you may see the main line items of your profit and loss, which is total revenue, total cost of services sold, gross margin, salaries and taxes and payroll taxes, variable expenses, fixed expenses, EBITDA, total depreciation and amortization, EBIT, interest expense, net profit before tax, tax expense and as a result net profit after tax. Please note that by clicking on this plus button you can unhide each of the category and see the digitalization, for example for the fixed expenses or variable expenses and for any other category. You may see the values by months and all the breakdown by line items. On the cash flow tab you may see the cash flow broken down by operating activities, financing activities and investing activities. Cash flow indirect shows you the same operating activities, investing activities and financing activities bar, but more collapsed form, so it's more easy to see the values by months and more easy to read the numbers. On the balance sheet you may see the breakdown of your balance sheet by current assets, which is cash and accounts receivable, non-current assets, which is fixed assets, current liabilities, non-current liabilities and your equity. The summary of these 3 statements you may see on the financial statement summary, which will show you the annual numbers for income statement, cash flow and balance sheet. And using this selector you may select specific year to see this year by months. So on the top you have the main income statement line items and the charts, which will show you this information by years and by months. Then the balance sheet KPIs and charts and the cash flow statement, charts and the absolute values. On the KPI tab you may see the main benchmark KPIs for the SaaS industry, which is LTV to CAC, churn rate, month-over-month net MRR growth percentage, gross margin and EBITDA percentage. You may set the industry specific KPIs which works for your country or for your region. For example, the EBITDA percentage can be 30%, for example. So you may see on this chart that EBITDA percentage now is 30%. All the values calculated by the model using the assumptions you input you may see in here. The values by years and the same information you may see on the charts, which is LTV to CAC, churn ratio, month-over-month MRR growth, gross margin and EBITDA. On the each chart, the orange column, this is industry specific benchmark, and blue column, this is the value calculated by the model. So using this table you can easily compare where are you in terms of the industry specific benchmarks and how is your business works in comparison to other businesses. On the burn tab you can find the calculation of cash burn ratio, which consists of average burn amount across the year, average annual cash balance and calculation of cash burn ratio. On the charts above you can also see the cash burn ratio by years. On On the top revenue tab, you may see your revenue breakdown by 3 main offerings and payment cycles, which is monthly contracts and annual contracts, and additionally an advertisement revenue. You may see also the breakdown by years of absolute values and breakdown by years of percentage allocation. The same information you may see on the charts below. It shows you the percentage allocation and absolute values allocation. On the revenue depth and monthly run rate charts, you may see the detailed year breakdown, which can be changed in here, and you may see the revenue depth with absolute values of these revenue streams and the percentage allocation on the pie chart. On the revenue bridge, which is the final chart on this tab, you may see the main drivers of your revenue growth between these 2 years, which you can change also, for example, from 2021 to 2023. So on the left side you may see the 2021 revenue, on the right you may see the 2023 total revenue, and between these 2 columns you may see the main drivers of your revenue growth between these 2 years. On the top expenses tab, you may find the breakdown of top 4 expenses categories, and all other expenses collapsed into other category. You may see the breakdown of absolute values broken down by years with the total below, and also to the right you may see the percentage breakdown of these expenses. The same information you may see on the charts below, which you may find the percentage breakdown and the absolute values breakdown. On the couple of charts below you may find expenses depth and monthly run rate for selected year. You're able to change this year, and you may see the absolute values and percentage breakdown on the pie chart. On the expenses bridge, you may find the main drivers of expenses growth between these 2 years. These years are also changeable, so you may select the first year and you may select the last year. And you may see that total expenses starting in 2020 will change to total expenses in 2024 by this waterfall. On the break-even tab, you may find the calculation of revenue break-even level and break-even chart. For this particular use case, you may find that your revenue break-even level is less than actual revenue calculation. This means that company is profitable. On the valuation tab, you may see the calculation of company valuation based on the cost of equity, which you may input here, cost of loans you previously inputted on the dashboard, calculation of resource share you may see here, there is also tax rate, and here you may find the weighted average cost of capital. In the valuation model there is 2 valuation methods, which is EBITDA multiple and revenue multiple. You may select one of them, and below you may input multiple of methods. Based on this information we can see terminal value, which is calculated on unlevered free cash flow. You may see the present value of unlevered free cash flow, NPV, and multiplicator evaluation for this particular company. On the GCF tab, you may see on the top unlevered free cash flow calculation in $1,000. As a result, you may see the unlevered free cash flow. And on the bottom, you may see the scenario analysis for your total enterprise value. The first scenario factor is discount rate, or weighted average cost of capital, which is 12, 14, and 16. These cells are also changeable. And the second factor for the first scenario analysis is EBITDA multiplicator, so you can use this multiplicator as an assumption as well. So you may change it to 8%, for example, and you may see the different values for your enterprise value. The second one is terminal perpetuity growth rate, which can be changed as well, for example 5%, and you may see below all the enterprise values scenarios. the negotiation table you may see the calculation of investment round and negotiation round, up to 3 rounds for each. So on the top you may see the assumptions. First is a year of valuation or exit. By default this is 5 years. You can change it to another value, for example 4 or 6 years. You can see the calculation of forecast annual free cash flow and multiplicator based on the valuation tab. Here is the calculation of valuation in future value, also based on the valuation tab. Then we have the assumptions and calculations for 3 investment rounds. The first one is months of investment. You can say month number 2, for example. Investor required IRR, for example 45%, amount of investment $900,000, duration of investment, which is 5 years minus 2 months, which is 58 months. Here is a calculation of required future value for investor, and the shares, cumulative investor share and cumulative founder share, based on these assumptions. In terms of negotiation round, you can input individual investor share as an assumption, for example 1.5, and you may see the calculation of future value for investor and individual investor ROI and individual investors IRR. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports and other information which can be useful for reporting purposes. On the tabs without color you have some extra calculations related to revenue, to debts, equity, inventory and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements and setup. There is short explanation about what each tab does, but if you want to know more, you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable. So you may click on, for example, Book Assets and you go directly to this tab. On the Inputs tab, you can set up your main pricing and billing inputs. So let's start the setup of this tab. We have 3 offerings here: base, medium and enterprise by default, and breakdown of monthly payment cycle and annual payment cycle for each one. So here you can set up the regular price per month by years. Let's pretend for base offering for the monthly payment cycle it will be $40, $45, $50, $60 and $65. For the annual payment cycle you should input also regular price per month but with annual discount. For example, this can be 35, 40, 45, 50 and 55. So in here you may see the calculation of your payment discount. And the next step is to set up your upsell. Let's pretend that 10% of your customers will pay you additionally $20. And let me show you how it works. So here you have the booking price per contract, which means that you have $40 per customers plus 10% will pay you additionally $20, which means in average $2 per contract, which means that booking price per contract will be $42. The same for the next year, 45 plus $2 will be $47, $57, $62 and $67. If you don't need this upsell, you can just clean this and you will not have any upsell. For the annual payment cycle, the booking price per contract will be just, in this case, multiplied by monthly price multiplied by 12, which is $35 multiplied by 12 will be $420, 480, 540, 600 and 660. Imagine you need upsell, 10% will pay you additional $10, which will add $1 per month, 10% of $10, and this $1 multiplied by 12, which will give you additional $12 for each booking price per contract for each year. Additionally, you can input one-time revenue setup or setup fee per new customers, which you can set up here, 50, 45 for example. If you don't need any setup fee, just clean the cells and you will not have any setup revenue. Also, you have revenue terms payment delay here, starting from 0 months to 12 months. If you don't need, just select 0. If you will use some months, for example 4 months, it will impact the account receivable line item in your balance sheet, which is here. Additionally, you have another revenue stream which you can set up here. This is advertisement revenue, which works on the CPM approach. So you have monthly impressions per freemium customers per month, 15 for example, and cost per 1000 impressions, which is CPM, for example 150, 165, 170, 185 and 200 in year 24. On the Customers Movement tab, you can set up the conversion rates from freemium to paying customers, customer churn, and customer movement rates. So let's start from the conversion from freemium to paying customers. Let me show you how it works. Let's pretend that first month, this is January 20, and you acquired 100 freemium customers. Then in January, which is month number 1, 10% of these customers can convert to paying customers, which is 10%. On February, another 5% from first 100 freemium customers can convert to premium customers. This is in total 15. And for example in March, which is month number 3, 3% will convert to paying customers as well. So in total, 18% of your freemium customers will be converted to paying customers. So this works in cohort basis, means that if in February you have 200, this means that in February you will convert 10%, which is 20 customers, another 5%, which is 10 customers, will be converted in March, and in April it will be converted another 3%, which is 6 customers. So in total, from each cohort, 18% of freemium customers will be converted to paying customers. It can be used as a one-time conversion as well. For example, in month number 4, starting from acquisition date, 10% of your customers will be converted to paying customers. So if in January 20 you acquired 100 new customers, in April 20, 10 customers will be converted to paying customers. Hope that makes sense. So the next setup is customers churn. You have 3 offerings, which is base, medium and enterprise by default, and you should input monthly churn rate by years for monthly payment cycle and for the annual payment cycle. Let's say it's 5, 4.5, 4, 3.5 and 3% for the monthly payment cycle, and for the annual payment cycle it can be 4, 4.8, 4.6, 4.4, 4.2%. These monthly churn rates for the annual contract will be converted to the annual churn, which you may see here in gray color, and the same idea is used for offering number 2, which is medium, and for offering number 3, which is enterprise by default. The last setup on this tab is customer movement, which shows you the migration between plans. So if you don't need any migration, you can just clean this tab. If you need the migration, for example, from base to medium or enterprise, which is upgrade, you can input 0.5% for example, which means that 0.5 your active customers will move from base to medium on the monthly basis. So 0.7% will upgrade to enterprise. The same idea for medium and enterprise offerings. For example, if you want to downgrade some of your enterprise customers to medium, you can put 0.1. This means that 0.1% each month will downgrade from enterprise to medium. So once you set up this, you may review the customers movement chart, which will show you the monthly amount of new customers in blue, monthly amount of churn customers in orange, and as a resulting line, this is active customers by months. On the cost of services sold tab, you can input up to 5 line items with the calculation of cost of services sold. So here you have 5 placeholders. Let's say for the placeholder 1 it can be hosting cost. Also, you have up to 5 different categories of how you would like to forecast your cost of services sold. First 2 line items is reserved for the calculation as a percentage of total revenue, another one as a percentage of subscription revenue, one more as a percentage of transactional revenue, and the last one is used for the calculation of cost of services sold as a percentage of setup revenue. So let me show you how it works. On the top you have the basis of calculation, which is total revenue, and the breakdown: subscription revenue, transactional revenue, and setup revenue. So we just set up hosting cost, and we chosen the basis as a percentage of total revenue. So by years we can input this amount, like 10%, 12, 13, 14, and 15. So below you may see the calculation of these line items by months. Finally, in income statement tab, under total costs section, you may find all the 5 line items and the amounts by months. On the variable expenses tab, you can input up to 15 line items of your variable expenses. So please note that you can input only in yellow cells, so first 14 cells are changeable and the last one is already predefined, which is customer acquisition cost, which you input previously in the dashboard. So for this customer acquisition cost you have amounts without any need to input any assumptions. All other categories are broken down by 3 categories: as a percentage of total revenue basis, as dollars per active customer, and as dollars per new customer. So on the top you have 3 bases for the calculation of variable expenses categories: total revenue amount, active customers, and new customers, broken down by months. So now you can input the names of categories, for example utilities. So you can input a percentage of revenue, 2%, 3, 4, 5, 5.5 by years. Below you may see the calculation of this line item by months, and additionally in the same way you can input your variable expense as a dollar per active customer, 5, 4, 6, 7, 8, and as a dollar per new customer, 1, 2, 3, 4, 5. You have also notes for each of the type for these variable expenses with some explanation of what you are supposed to input in this cell. And as a summary, in income statement you may find a section of variable expenses, and you may see all the detailization of variable expenses line items and the detailization by months. On the wages tab you can input your headcount by categories, with hire and fire date, with annual salary, with ability to input different number of employees by years, with annual salary rise percentage, with monthly bonus and tax rate. Let me give you a couple of examples. Let it be CFO, which you are going to hire in March 20. You are not going to fire him, so the fire date will be December 24. So annual salary can be $50,000, and this will be one CFO over the time. So you may see one CFO, which is one headcount, starting from March till the end of the model, which is December 24. Also you can input 5% of salary growth rate. You may see the amounts by years connected to this annual salary and impacted by annual salary rise. Let's set up 10% monthly bonus and 5% of tax rate. So you may see below the calculation of salary broken down by months, monthly bonus, which is 10%, and 5% of monthly taxes related to the payroll. Another option would be admin account, which will start April, which will grow till the end of the model with annual salary of $30,000. Let it be in year number 1, 2, then 4, 6, 8, and 10 headcounts. 3% of annual salary growth, 5% of monthly bonus, and 5% of payroll tax rate. So in here you may see total staff numbers, which is 2 for the year number 1, 2020. Starting from year 2021, you'll have 4, then 6, 8, and 10 in the last year of the model. Again, calculation of salaries for these two, in this case 4 headcounts, calculation of bonuses, and calculation of monthly base taxes. You may see an income statement, total salaries and wages, and here you may see the total amount of bonuses, payroll taxes, and wages for these headcounts. On the Fixed Expenses tab, you may input up to 15 line items for your fixed expenses. Let me show you how it works. For example, you have utilities. You will start pay starting from March 20 till the end of the model, which is December 24. You may see it here. Let's pretend periodicity will be daily with amount of $50 per day. So you may see these amounts in here. It is calculated based on count of days within this month. So obviously in March 20 you have 31 days. That's why you will have 1550. In April you have 30 days. This means this will be $1500. Also, you have ability to input some growth rate year over year. Once you input this growth rate, you will see that your utilities will grow over year. Let me give you a couple of other expenses types. For example, advertising. Let it start in March and finish in August 24. This will be on weekly basis with amount of $100 without any growth. So starting from March till August 24, you have $400 per month, which is 4 weekly payments each month. And that's it. Another option is bi-weekly. For example, $500. You can start from July, for example, and you will have 2 payments, which is 2 bi-weekly payments within the month. $500 multiplied by 2, you have $1,000 per month. Again, you can input some growth rate and you will see that your advertising expenses will grow year over year till the August 24, which is the last date of this expense type. Another option, office setup, which can be one-time payment, which will happen in February 20 with amount of $5,000. Obviously you should not input any growth rates because this is just one-time fee, and you may see that office setup will happen in February 20 with this amount. Another option, insurance. Let it be start from January 20 till the end of the model, and it can happen monthly with $1,000 per month. With 5% of growth first year, 3% of growth second year, 2% of growth third, and 1% year number 4. So you may see this calculation here. Starting from January 21, it will grow for 5%, which is $50. And starting from January 22, it will grow for 3%, which is additionally $32. Another option, quarterly. You may see that insurance will be paid $1,000 each quarter. You can start it, for example, from February, and this will be shifted to 1 month forward. Another option, semi-annually. In this case, you will have insurance payments once per half a year, again with a percentage of gross. And the last option is annual payments or yearly payments. You'll pay one time per 12 months, starting from February till December 24. For each expense type, you can use gross rate, and the calculation you may see in here. Also, in income statement, you may find total fixed expenses group. If you will ungroup this section, you can see these amounts broken down by months and by fixed expenses line items. On the Assets tab, you may input up to 7 assets line items and change this accordingly. For example, for the line item number 1, office expenses, you can set up the launch date for this asset type, for example March 20. You can input useful time years, let's say it's 1 year, and the asset cost, for example $50,000. So you may see in the calculation below capital expenditure, which is in March 20. You may see the calculation of book depreciation for 1 year according to the useful time. If you will set 2 years, for example, you will see that it will be amortized fully for February 22, which is 2 years from March 20. And you can see the closing net book value of this asset. Additionally, you can input up to 6 other assets line items. So in income statement, you may find the depreciation and amortization amount for each month. In the cash flow, you may see the fixed asset capital expenditure, and on the balance sheet you may see the total closed net book value for these assets. Also, on the top of the dashboard, you have debt assumptions. Let me show you how it works. So for each debt, you're able to select the debt type. There are 2 debt types in the model, which is annuity and usual. Annuity means that each monthly payment, which consists your debt repayment plus interest expenses, will be equal each month. In case if you will select usual, your main debt repayments will be equal parts, and interest will be just interest on the debt's closing balance. Let me give you an example how it works. So you may input some amount of the debt, the launch date, term will be 60 months, and interest can be 5%. You may also input the grant, which is just simple amount, which is paid in some specific months, and that's it. No repayments, no terms in terms of interest. So all the calculations of the debts you may see on the capital tab. Calculations for debt number 1, debt number 2, debt number 3, total debts with grants. These calculations impacts income statement, interest expenses, the cash flow, interest paid, debt drawdowns, debt repayments, and on the balance sheet you have the debt closing balance. On the cap table, you can input the main cap table assumptions for funding, angel, seed and Series A rounds, see some summary and calculations and reports. So let's begin from the founders information. On the top left side, you can input up to 3 founders and up to 5 categories of employees. You can set the names. You can input here also common stock and common options. So you can input some amount, for example 500 of options for employee number 1. You're also able to input unissued employee stock options plan if it's needed. If it's not needed, you can keep it as 0 by default. So the result, you may see the total outstanding stocks and options and the dilution across all these shareholders. The next step will show you the assumptions for angel round. So you can input employee stock options increase on pre-funding, for example 600 You can set date of close, which can be April 20, for example. You can set the pre-money valuation, which can be some amount, 500,000. You have up to 5 angel investor or investor groups. You can input some amounts of funding. Below you may see the calculation of shares prior to angel round, the average share price, the sum of angel investment and post-money valuation based on the pre-money valuation and equity round. Exactly the same structure for the seed round and for the Series A round. Below you may see some summary charts and tabs. So in here you can see the shareholders, which is founders, employees and new options pool broken down by shares and dilution. Additionally, you have angel investors on the next tab to the right, seed investors and Series A investors. Below you may see more detailed cap table calculation based on the names of founders, employees and angels. Again, you have common stock, common options, total outstanding, the dilution percentages across these shareholders. In the next step to the right you can see the angel investment amounts, count of shares and the dilution after angel round, seed round and Series A round. Additionally, you have options tab where you can see the capitalization table summary on the top. You can see the capitalization table new options, which is angel, seed and Series A, and you can input the capitalization for new issuance of options. For example, founder 1 can have in seed round another 600 options, employee 1 can have in Series A some 300 options. As a summary, you have 3 reporting tabs which can be printed. This is cap table print, the detailization of funding, angel, seed and Series A round, more detailed angel cap table round, which is summary of cap table before angel, after angel, and the breakdown of investors by investor names, dilution, outstanding and common percentage. The same structure has seed cap table, it has founder cap table, angel investment and seed investment detailization, and on the top you can see the summary of cap table, after angel and after seed funding. Also on the top of the dashboard you can set the corporate tax rate which works for your country. For example, it can be 30%, and you may see the calculation of corporate tax in income statement in the line tax expense. On the cash flow you may see the corporate tax paid. By default this is December, and on the balance sheet you may see the corporate tax payable by months. On the top of the dashboard you have currency denomination and taxes setup. So currency inputs means that you can input all your drivers for the model using one currency. You have currency outputs. It can be the same as currency inputs and it can be different from currency inputs. So let me give an example. When you input in United States dollars, you have euro as an output, and for this case you can set up currency exchange rate. This is 1.2 for example. In this case you will have in the model all your inputs in United States dollars, all your outputs in euros, and there will be conversion rate between currency inputs and currency outputs. Additionally, you have denomination, which means that you can denominate all your outputs on the reports. In this example, you have denomination is 1000, means that your outputs is denominated by 1000. You can select millions. You may see that now it is in $1 million. You can set also billions or without any denomination. Additionally, you have corporate tax setup. You can change this number and this will impact tax expenses in your income statement. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.